happy weekend, Maverick Currency traders. I am Rob Reinhold. I'm joined by Mr. Ankit Sharma, and this is the Currency Room. And here we are, last week of October, so we have one more week to add to our pip counts. In this session, we're going to be going over the news of the week. We'll take a look at the broad markets, and then we're going to go into every single currency. We're going to score it from +3 to -3, and that tells us where we're going to hunt for our trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
All right, let's start off with last week's events. Probably the biggest news out there. We're 2 weeks out from the election, and we've got yields that have risen back up, even above where I thought. I thought yields were going to get to the 4, maybe 4.1 area. We're all the way up into 4.2 on the 10-year bond. All of a sudden, that starts to put pressure on things. If you take a look at the stock market, small cap stocks are really underperforming the rest of the stock market. So it's just creating a little bit of a weight, holding stocks down and pushing them down. We did see the equities go down for the first time in 6 weeks. So the S&P and the NASDAQ had a 6-week win streak. The NASDAQ may close positive for the week, maybe negative. It's about flat right now, about an hour before the close, so we'll see what happens. But look, we've had 6 weeks of up weeks. We're going to have a down week. And again, it's just everything's being kind of pushed down, and think about the election coming up. No one's going to be taking in some big crazy bets before the election. So it's not surprising, and I wouldn't be surprised if we see kind of the same thing next week where the underlying market is bullish, but there's just a blanket on top of it keeping it further down. The dollar had another big week. We're now on our 4th consecutive weekly gain. The dollar is up about 4.4% just this month. So this is a big move for the dollar. We'll take a look at the chart of the dollar and we'll see if there's more gas left in the tank. But dollar has definitely strengthened along with those yields. And we did hear from the Bank of Canada this week on Wednesday, and they cut rates by 50 basis points as expected. Canadian inflation has been much weaker than all the other countries. So we expect to see the Bank of Canada as one of the most dovish of the central banks. Let's take a look at some of these economic numbers. All right, the Eurozone manufacturing, if you could take a look at it, I want to say mixed. So the Eurozone was slightly less than expected, but Germany slightly more than expected. The UK slightly less than expected. Okay, so European manufacturing, let's call it a little bit weaker than expected. Then in the US, we got unemployment claims. This has been a number that has been rising, and people have been a little worried about this. It got all the way up to 260,000. It plummeted down to 227. That's actually good news for the U.S. economy. And then Canadian retail sales, look at that absolute disaster. That's why we've seen the Canadian dollar weakness. That's why we've seen the Bank of Canada lowering rates, because this is a huge miss. So core retail sales supposed to be up 0.3% and down 0.7%. That is a really bad print for the Canadian economy. So let's go in and take a look at the numbers last week across the board. And you can see the S&P had a little bit of a down week. The Qs, as I said, the market isn't closed yet, but the Qs might be up a little bit, might be down a little bit. But look, we've had 6 up weeks. This is a pause. This is definitely a pause. There's no question about it. The question is, has it broken any technicals? We'll take a look at that next. Crypto, really strong over the last 2 weeks. Same thing. Like a blanket put on top of it, just held it down, and eventually it sold off a little bit. But we saw good movement from the commodity industry like gold, silver, and oil. All had good weeks this week. We take a look at the chart on the S&P. Nothing really surprising here. It's simply higher highs, pullbacks. Higher highs, pullbacks. There's nothing in this chart. There's not one thing in this chart that is telling us that the bull market is over. Now, when we take a look at most recently, though, this candle is not a great candle. It's just not a great candle, because we saw this pullback, very orderly pullback, And then once we get this kind of a little bit of acceleration at the end, that's what happens on these pullbacks. They accelerate right at the end, and then they have a snapback. That long lower shadow is a great long lower shadow on Wednesday. Thursday, we had a sell-off again, and it snapped back. If this candle would have been a green candle, it would have been a great sign that we were likely to have another breakout to new all-time highs next week. This candle's telling me, okay, we're just not ready yet. This candle is not telling me it's bearish. This candle's not telling me anything. What I'm looking at here now is more basing action than a pullback, than a bull pullback and run to new highs. Just basing action. We have to understand again where we are. We're here at the end of the year. We're here before a U.S. election. It's very unlikely that we break out and run this week. We could. It is probably a little bit more likely if someone was say, Rob, I need you to put a bet on what the market does this week. And they say, but you can only bet on, is it up or down? My bet would probably be down. Because again, I think there's a blanket over the top of this market right now until the election. Ankit, what do you think about this market, the equity markets for this week?
Hey, Rob. Well, the equity markets, again, for the next couple of weeks, I think could be tricky. And again, there's a lot of things going to be weighing on the markets. We have the elections, which is, again, the big elephant in the room. And the other thing we have is next week we go in and now we have another jobs report. And I want to highlight how important jobs report is right now. It's not the CPI numbers that are moving the markets. This right now is the employment numbers. And if you just take a look at the big rally that we saw in the dollar and everything, that really started from that big employment change that we got, last month. So I think that's going to be really important next week. So there's a lot of these things that are in the mix here that could easily trigger a market little pullback a little further. Based on the price action we're seeing today, I think we're kind of sideways consolidating here. But I think what we expect now in the next couple of weeks is a bit more volatility where we can get these big moves both on the upside and the downside. Very similar to what we saw this week where we saw, quick correction and then we saw a quick rally. I think we can expect something like that in next week. So I think if I have to really make a call, I don't really have a strong call here, either going the upside or the downside. I would say that if we start to break some key levels, we could see some correction. But I expect markets to kind of go back and forth until we see something more definitive.
And I agree, Ankit. I think if you see a big move, I think it's going to be limited, meaning that since we're not going anywhere, if you do see a 1% down day, it probably gets bought. If you see a 1% up day, it probably gets sold off. So I think we definitely are in this sideways pattern in the equities. So the question is, how is that going to affect Forex? How is that going to affect the crypto? And one of the things we've seen over the last month was Forex volatility has been compressed. I'm actually really happy this week with this chart because it's showing us that we're now getting much better movements. If we go back 2 to 3 weeks ago, we were getting like the best stock or the best currency was up 0.5% and the worst currency was down 0.3%. Very tight. All of a sudden now you can see dollar yen was the best pairing of this last week, and that moved 2%. That's a really nice move for the week. And again, if you were pairing up things like euro kiwi, that's a nice 1% move. Those kind of moves you can grab some decent pips in. But when the total move is like 0.5% between the differential, it's really tough. So really the story was dollar and European currencies strong, yen and Aussie and Kiwi weak. CAD, we'll take a look at CAD. It's kind of doing its own thing here. Sold off really hard over the last month or two into the Bank of Canada. Probably got a little bounce back just on relief. Coming over here to the cryptos. Again, not a big down week. We'll take a look at their charts. We had a nice run over the last 2 weeks. We hit against that long-term resistance and just a pullback. If the equities break out, I think cryptos break out. I think cryptos look really interesting here. Not like right here, right now, but over the next 2 weeks, I think cryptos could be a really good trade on the upside. Right, let's take a look at this market here. We already looked at the stock market. Let's take a look at the bond market. And this is what Ankit was talking about. I mean, just After we hit this low in September, it was just a climb higher, higher highs, higher lows. Here we just reached a higher swing high. Okay, so it was probably time for a little bit of a pullback. We probably pulled back to maybe 4.1, 4.13. Not a big enough pullback to really change anything as far as the dollar goes. So if this pulls back, the dollar pulls back a little bit. But again, I think this is going to be a buying opportunity on dollar. Taking a look at cryptos, that line is a very important line because that was kind of the line holding it all down. And you can see we broke above that. We broke above this line. We pulled back. We held onto it. Long lower shadow on this day. A nice bullish engulfing this day. Yes, Friday's candle could have been a lot better, just like the stock market. It could have been a lot better, which tells me it's not going to be what we call a V bottom. You know, V bottoms are really nice where it comes up, bounces, and then takes off. It might be one of these W bottoms, you know. So again, like I said, I don't like crypto here, right now, but I do like the overall price action. There's no question that the overall trend is to the upside in the crypto markets. Next week, let's take a look at our schedule. Here we are. We've got a lot of stuff on the dollar this week. A lot of stuff on the dollar. Starting off, we got JOLTS job openings. This has been a number that people have watched. Consumer confidence, ADP, and advanced GDP. So again, we're going to get our first reading of third quarter GDP, 3%. 3%. So again, that is a big move. That's a strong economy, showing that the economy is still growing. Coming down here, we get the PCE price index, the Fed's favorite number. Take a look at the expectations, 0.3%. This is one of the reasons why you're seeing U.S. bond yields rise. Remember, 3 months ago, it was like, oh, the Fed's going to cut 5 times. The numbers we've been getting, the economic numbers have been better than expected, so people have had to pare back that bet. And now it's back to the point where the people are starting to think, well, maybe the Fed, maybe there's only one cut for the end of this year when there was 3 priced in just 3 or 4 weeks ago. Then as Ankit said, we do have the jobs report. Jobs report is not supposed to be as good as the last one, 125,000 jobs. But you'll see, 4.1% unemployment rate, 0.3% wage gain. That's still a solid growth number. I think this number gets beat. I think this number is probably a little bit higher based on everything else we've seen in the economy, but we'll just have to wait and see it. This week, it really is about dollar, 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 dollar. The other thing I want to point out, Aussie CPI. So the RBA, when we take a look at it versus the RBNZ, has been a little bit more hawkish. We'll see if they can keep that. If they lose that as well, I think you can basically put the Kiwi and the Aussie in the weak category for the foreseeable future. And one central bank, Bank of Japan, they have really gone from being very much in the news to very not in the news. Ever since we had that little mini panic in July, the Bank of Japan has come out and said, hey, we're not going to do anything until volatility dies down. And I think, again, the yen has strengthened. The yen has held up. There's no reason for them to do anything right here. I think this is one of those Bank of Japan reports that you can sleep through. Now, we said you could sleep through Bank of Japan reports for about 4 years, from 2016 to 2020. And then all of a sudden lately, we said, hey, these are in play. I just don't think this one is in play at the moment whatsoever. So ultimately, again, lots of U.S. jobs data, a little bit of Australia data, a little bit on the Bank of Japan. But this is all about the dollar this week. So let's take a look at these currencies. I'll go through crypto. Ankit's going to take us through the Forex. I've definitely been a Bitcoin bull compared to everything else. And I just want to go back through these charts. I mean, I'm going to show you these Bitcoin charts, and then I want you to take a look at it compared to the other currencies. Run up to 66,000, resistance, pulls back. Has a little W bottom, breaks out through it, pulls back, and look, we did not break support. We had that long lower shadow. It was down for half a day, recovers, nice confirmation candle. Again, not the greatest follow through, telling us it's more likely base. until it breaks out. But to me, I think the next move higher is higher in Bitcoin. Okay, what do you think about that call? You think cryptos actually break out higher?
Hey, Rob. Well, good question. And I would say that this whole crypto move, I wish I had a better insight here. But again, I think we have many chances for crypto to really outperform this year, and they haven't. So it really kind of leaves me the question. Could we expect an end of the rally? Maybe. Well, I don't know. I don't have a strong opinion on the Bitcoin here because just the lack of that participation where things have really rallied. All-time highs, keep hitting all-time highs. It hasn't. So there is some relative weakness to it. Like we haven't seen that the broad rally in cryptos that we witnessed back in, let's say, 2021. So I don't really have the same backdrop yet. But one thing we do have to start thinking about is the whole, once we pass this next 2 weeks, is what's the end of the year rally? Is it an end of the year rally? Is that something that's going to come in? And maybe at that point, I can have make a call that maybe we can see a bit of a performance chasing. But so far, I've not been really that excited with the cryptos here because as it gets into that resistance level, it just pulls back. So I really need to see the continuation from that break to really get excited on cryptos here.
I agree with you 100%, and my bullish call is 100% predicated on equities breaking out and running after the election. If that doesn't happen, then this call on crypto does not happen as well. But I just want to show you the relative outperformance of Bitcoin. Bitcoin Cash, you can see we didn't break out to new highs. We've been holding that line and actually pulled back. So we got a lot of overhead resistance here. Bitcoin Cash, I don't want to have anything to do with it when Bitcoin looks far superior. Ethereum coming up, hitting these levels twice, could not break through. Serious pullback to the downside. And then we come over here to Litecoin. All right, if someone said, Rob, I like Litecoin better than Bitcoin, okay, you know what? I could go along with that. Nice new high, nice pullback. Okay, Litecoin looks fine as well. So if you're taking a look at crypto, like I said earlier, I don't think it's ready to go yet. When it does go, Bitcoin and Litecoin are likely going to be the best performers. Right, Uncle, let's take us through the dollar and yen and all the other currencies as well.
Absolutely. Well, let's just start with the dollar here. And, this is, if you really look at the last 2 months, it's been just a one-way market. We had that one-way market down. We got a big reversal in October, early October, and we just got a one-way reversal here. So nothing really has changed in the chart, and I've pointed that out many times in the last few weeks, is that if you look at a velocity chart, you're not really seeing a lower high and a lower low. That's really what really confirms a trend change. What we get is a bit of a pause or sideways move, and it just runs up higher. So I don't have a whole lot of things to add here. I think the dollar likely to continue higher, but eventually, I think it's a similar trade as we had last month, where dollar was so weak, and that jobs report really changed things around. And again, I'm going to this week as well. I've been thinking, yeah, are we ran up too much already? Are we see a bit of a repricing, or is it going to propel higher? So again, it all comes down to that jobs report. And if that jobs report, like Rob said, if you're expecting a better than expected jobs report, I think we get that big break or big capitulation sort of onto the top side before we can really, change its course. So far, you want to be sticking with the trend. There's no indication on trend or velocity that it wants to go the other way. So we want to continue on the upside. But remember, you got to think about the next week where this economic data is going to weigh on the dollar, both ways, on the upside and the downside. So I think this is going to be an interesting week, but you got to really be on the toes here. Want to continue with that trend, but if you start to see that trend change, you want to change with it. But going to this week, Rob, going to be bullish to the USD.
And Ankit, I think any pullback early this week in dollar is a great buying opportunity. I think Friday is a toss-up. I think Friday is big up, big down. I have no idea, but I think if you get a decent pullback, Sunday, Monday, I really like that setup for a bounce.
Absolutely. I think that's just what has worked in this trending move. All pullbacks were just bought out. Now let's just take a look at the dollar or the yen. And I know the yen has had some dramatic changes. Remember, like a month or month and a half ago, yen was very volatile, and here we are. That volatility is non-existent. So I think again, Bank of Japan is due this week. Again, I don't have much expectation here. I think it's all about the dollar here. So we want to be continuing shorting those rallies. And I've noticed one of the things that whenever we get this risk off move, meaning that when we start to see equity pull back, I've noticed that yen sort of picks up. Then we see Swiss franc picks up. Then, so expect some bounces. Especially if you start to see that risk off sentiment in the equities, I think that's really where you want to stay away from shorting the yen. But those are again great opportunities to get into those bear rallies onto the downside. So trend is pretty clear, but you just really got to watch out for that risk off sentiment that we are getting, especially this week. A few times we got that risk off sentiment. Those are the times you might want to scale back on that bearishness on the yen. And now going into Swiss franc, this is again one of the other currencies that, when market rallies, it doesn't do anything, and when markets start to pull back, it start to really act as a safe haven currency. So that's really how the Swiss franc has been acting here, and now we're getting a nice little breakout. So going into next week, especially if the markets get a little bit more shaky, we start to pull back towards that 20-day moving average on the S&P. We could see the Swiss franc act as a safe haven currency. But outside of that, I think it could go just drift sideways the way it has been. So it's really shining moment is when markets start to look weak. Now, comparing that to the euro, well, euro you can see has sort of turned things around, after that pulling back a little bit. So this thing again lagging the Swiss franc, but they're kind of doing the same thing. So overall, eurozone is not really where we are seeing weakness. We can see that in the Rob euro here. Velocity you can see is picking up very nicely. So there's no reason to be short the euro. But again, if you compare that to Swiss franc, that looks better. But now if you go to the pound, now pound again looks way better than the euro there. So pound and the Swiss franc are the one that are shining in the eurozone here. You can see the trend score is +2, but the velocity is a +3. So despite that weakness that we see, or other places, we're seeing this strength in the pound alongside of the dollar, which is again very promising here. So going into next week, we don't have a whole lot of news out of the UK. So I think if you're looking at other places to shine, I think the pound probably do better. Now, let's just take a look at growth currencies because that's really where we are seeing that weakness. So starting with the CAD. I had so many questions about CAD because again, they cut rates by 50 basis points, the biggest cut since the pandemic. And here we are looking at CAD really not doing much. So again, this is a good tell that maybe that was already priced in. CAD is again holding it better because of the proxy with the USD. But overall, as you can see, that CAD's just not really going anywhere. So even though we have a +2, we got that range that's set up on this one. So if you really want to be looking at long the CAD, it needs to break out above that resistance. But I think for now, this could be just a sideways currency. Now, if we take a look at the Aussie and Kiwi, this is the story. That's really where the weakness has been. You can see that the Aussie is slowly pulling back. It's right in between that 20 and the 50 moving average. So this is something that has done well, and we have the central bank is not as dovish compared to the other central banks. But when we talk about the dollar weighing down on certain currencies, it really weighs down on these growth currencies. So we can see that the Aussie pulling back. And again, next week I think is crucial because if the CPI doesn't support that, if we see a weaker CPI, we could see that break of that 50-day moving average on the currency basket on the Aussie here. So it's mildly bearish, but I will be definitely more bearish on this one as it breaks that support, and then we can take a look at Aussie against everything else. So the only thing that really gives us confirmation of a break is the Kiwi here. You can see that we broke down towards the bottom end of the range, had a little bear rally, and here we are breaking again. So it's a clear winner that the Kiwi is the weakest one. And again, if we take a look at central bank policies as well, the RB and Z is a little bit more dovish compared to the RBA. So right now, it's this central bank policies that really what's driving these currencies here. So going into next week, if I had to really pick between Aussie and Kiwi, again, Kiwi is a clear underperformer here. Back to you, Rob.
No question about the Kiwi. I actually ended this week short Kiwi Swiss franc. I'll be holding that pair over the weekend. I really like that pairing. So here is our trend score. Dollar is the best. The only question is, again, we've had a one-way market, and the way these one-way markets go is they just keep going one way until one day they have these fairly violent pullbacks. If we get that violent pullback, I think that's a buying opportunity, but I don't love kind of chasing the dollar here. I actually really like the European currencies much better here, specifically the pound and the Swiss franc. So these are my top currencies, pound and Swiss franc for the week. On the downside, Kiwi yen and Aussie. There's no question that that's where I'm going to be positioning for my trades. When we take a look at the velocity, that means like where things are moving right here, right now. The trend score is kind of big picture where they're moving. This is okay. What's moving now? When we take a look at that, the pound is the best. So I'm going to start this week off really looking at pound crosses. Where's the weakness? Aussie Kiwi. That's not in the yen right now. So even though we identified yen as one of the weaker currencies, I think you want to start off this week really focusing on pound on the long side and Aussie Kiwi on the short side. So that means that my focus first of the week is going to be pound Aussie, pound Swiss franc. Pound Aussie, pound Kiwi on the long side. Maybe a Swiss franc trade there as well. Let's take a look at them. I'm going to pair up Aussie Kiwi first because I really want to determine, what is weakest right here, right now. So here's a daily chart, and you can see over the last 4 to 5 days, it's been pretty much flat, meaning there has been no difference between strength and weakness between the Aussie Kiwi. I'm going to go to a 4-hour chart, and we're seeing the same thing. So look, flip a coin here. There is no way to determine if Aussie Kiwi is stronger. So because we like the Kiwi on a daily chart better, I'm going to take a look at pound Kiwi as my number one trade for the week. Let's start off with the daily chart, and you can see just a beautiful breakout of a little ascending triangle pattern here, long-term resistance at the 215.70 area, big breakout. The only question here is timing. That is the only question on this trade is, okay, where's the timing? We just had a big run on a Friday. Okay, can you buy it here? Yes, you can. Is it overextended? Yes, it is. Best case scenario, you get a pullback. You get a couple day pullback or a couple, candles on a 4-hour chart pullback. We bottom out somewhere around this last swing high, somewhere in the middle of 216 and 216.5. I think that is a good area to start looking for a buy. Ultimately, it could go as low as 215.70 down in this area. That would be a good place for a pullback. Here's the problem. How many of you have seen this, identified it, and say, I'm going to wait for a pullback, and it never pulls back and it just keeps running? Because you can see we've got a clear line all the way up to 219. So 219, there's not a lot of resistance in here. That's 200 pips, and we don't like to sit and watch 200 pips, but we also can't just randomly enter trades. This is where I really like pyramiding. Say, okay, I like this, I don't want to miss it, but I also think I might get a better entry point. How do you do both of those? Well, if you're just doing one position, you can't. You have to pick one or the other. This is where I love to give your brain two options to kind of break that binary choice. Take a position here, take a position early in the week, a half a position. And then if we do get a pullback into this 216 area, somewhere down in here, then you can add your second half and have a much better average price. Now look, if it doesn't hold 215.70 and it breaks down below, none of these trades are going to work. Buying it here won't work. Buying a pullback won't work. It won't work if it doesn't go and break out higher. But this way, you can get a better average cost by taking a little bit early and then wait. Now look, if this thing doesn't pull back and it just takes off, then you may just have a half a position. And you know what? That's okay. That's okay. You got a half a position. You'll manage it. You can always get into the second half at a higher point. Sometimes people's brains have a hard time wrapping or getting used to that because they say, oh, I need to get a deal. But look, you've identified all the way up to 219. Could you take another position at 217.5 50? Absolutely. There's still a lot of area to go before resistance. You could absolutely take it there. So plan it out, take a look at it, and do some dollar cost averaging. Well, not dollar cost averaging, pyramiding here. I'm going to take a look at pound Aussie, but you'll see that it's going to probably look very similar. And here we are, very similar trade here. Breaking out of some resistance, could get a little bit of a pullback, but I'm really focusing on pound Aussie. What do you want to take a look at?
Hey, Rob. Well, as we're taking a look at comparisons, the first one chart that really stand out to me that I'm looking into going next week is dollar CAD. And if you really look at dollar CAD, Rob, and we've seen this over and over, if you just scroll it out, you can see that we are now against a very important technical resistance here. And you can see that point over and over has turned out to be those switchover points where we've seen the CAD start to perform and the dollar underperform and vice versa. Rob, if you want to pull up to a weekly chart, because gives us a good perspective on where we are, just so you can see that how good or how strong of a resistance level that is. So as we go next week, that's my biggest question is that, is this a turning point for dollar, especially against the CAD? Or is this a point where if we get that massive break, now that's going to open a lot of floodgates. So I think that's the one chart that I'm paying attention to next week. 139 is a clear resistance. But if we clear that and stays above that, you can see that now we're talking about a big breakout even on a weekly chart. So I don't want to get ahead of that trade, but something that I want to just point out that's something I'm watching, and I'll be acting on it. So I'm looking at it both ways. I'm looking at it either a breakout or it could be a reversal point. If we see things go up and then reverse the way it did back in August, now that will be a clear signal that maybe in the shorter term we see CAD start to do better because we already had these CAD rate cuts out of the way. Now CAD sort of stabilize a little bit, and then we see the dollar pulls back. So that's the one trade, Rob, I'm looking next week. And if let's say the dollar CAD does flip, Kiwi CAD is the one that I was paying attention to. And that will be, again, I'm looking at, something that could do better, compared to the dollar Kiwi dollar, which again looks like a same trajectory. But here we are with the Kiwi CAD. If CAD can take a lead over the dollar, and if this stays weak, I think this thing is clearly showing me that it could easily break towards that 81 support level. So again, that will be the trade if I just wanted to take a look at that divergence. But then I want to continue being short the Kiwi, because right now we're talking about what's the best currency that we can buy it against. And if the dollar looks overbought, what's the next one that could take a lead? I think this one looks the best here. But Rob, you can also pull up Kiwi dollar as well. It looks similar. This is already broken down lower. You can see that it's running into that key support level. And, break below that, we can get towards that 58.50 area. So this thing looks pretty weak already. RSIs already to the oversold level. But the next opportunity, if there could be that shift between the dollar CAD, I really like Kiwi CAD over there. And Robbie, you even pull Aussie CAD, and looks very similar. So that will be the one trade that I'm kind of focusing on going to next week for a further break. So the dollar CAD is the one that I'm watching, Rob, next week. But then, as we discussed, dollar looks overbought at the same time. That's really where the movements are coming. Next 2 weeks are crucial. We don't want to get ahead of ourselves. Look for the economic data. If the economic data start to come out weaker, then perhaps we can take a look at some weaker dollar opportunities. Very similar to what happened back, in the first week of October. Before the jobs report, we had the jobs opening that was better than expected. We had ADP number that was better than expected. So the dollar really started to move ahead of that. Rob, if you want to pull up the dollar basket chart, and I just want to point that out, that sometimes, this data will start to move the currency before the jobs report. And if you just take a look at at the end of September, September 30, as you can see, where it was looking so weak. And then there we are, first report, second report. So by the time we got to the jobs report, it had already recovered quite nicely. So going into next week, we're going to look at the same thing. Does the economic data that we get on jobs report, ADP numbers, the job openings, based on that, we'll start to see the dollar move one way or the other, and we'll want to position ourselves accordingly. But don't go against the trend right now. Wait for that opportunity to come for either the upside or for any reversal potentially. I think we just would need to be patient for those opportunities. Back to you, Rob.
Thanks, Ankit. And before we wrap up, I want to take a look at one last currency pair. I think this is going to be the best differential. Now, again, all that means is like this week, the dollar was up the most and the yen was down the most, which means that these are where you identify this is the quote unquote best trade you could have made because the differential is the biggest. I think that you can absolutely trade dollar yen. And I think you can trade it on the long side and on the short side. Obviously, in the short term, it's a long only trade. But if this thing starts to flip around, I really like it because I think that this is where a lot of the action is. I think when we take a look at volatility, where are the biggest moves happening in the market right now? It's in dollar and yen. And so whenever I identify that, I say, hey, this pairing is potentially the best trade. I don't know if it's going to be long or short, but if this kind of volatility lasts, then this is a pretty good place to hunt right now. And you can see here, this is a really good setup here. A nice pullback here on dollar yen. We got our bottom here. We're starting to turn up. Once we can break through that SAR, it actually looks pretty good on the long side. So I also am going to be watching dollar yen just for some shorter term trades, not really based on trend, even though the trend is clearly to the upside here on a daily chart. I just like the fact that these two currencies seem to be moving the most. This week, we got a lot of dollar economic news, and also we have the Bank of Japan. Another reason why I do like that dollar yen pairing, just because it's got the biggest differential. Ankit, you laid out some great trades, and I think that comparison between dollar and CAD is just a great one, where if all of a sudden the CAD starts strengthening against the dollar because it's up against that major resistance point, pairing the Kiwi and the Aussie short against the CAD looks great if you don't want to pair it against something like the pound or the Swiss franc. I think those are great trade setups. All right, we got 1 week left in October to grab some pips, and then we're going to shut the books at the end of the month, and we're going to start the month of November for the second to last month. Everyone have a great weekend. Take care. Be safe. Goodbye, everyone.